Hey guys, welcome back to another episode. In this video, we're going to show you how to use the Bollinger Band indicator like a pro. This indicator is highly effective, but only when used correctly. You'd be surprised how often this indicator is used incorrectly. Now here's exactly what we'll be covering in this video. As always, make sure you hit the like button, as it goes a long way in supporting our team. So let's get right into it. So first, what is the Bollinger Band indicator? It is used to help you identify trending markets versus consolidating markets because of its ability to gauge market volatility. In simplified terms, you can use Bollinger Bands to identify overbought or oversold trade entries, but also you can use it to identify breakout momentum trade entries. So to access the Bollinger Band indicator, find your indicators, type in Bollinger, select the indicator, and it will appear as an overlay on top of your charts. Leave the settings as the default, which is the middle line being a 20-period moving average, the upper band being 2 standard deviations above the middle line, and the lower band being 2 standard deviations below the middle line. So the bands are traditionally used to interpret market volatility. During periods of low volatility, you'll often notice that the bands contract and can result in a sideways consolidating market. During periods of high volatility, you'll often notice the bands expand and can result in a trending market. As always, indicators are not magic. We only use them to support what we have already established with price action to increase the quality of an already good trade opportunity. So let's dive right into the strategies. So one of the traditional ways Bollinger Bands are used is as a form of support and resistance. When price reaches the band above, it can act as a form of resistance and bounce off of it and reverse downwards. When price reaches the band below, it can act as a form of support and bounce off of it and reverse upwards. So to increase the quality of this setup, you can do 2 things. First, apply this strategy to a sideways market. Notice how the bands are moving horizontally and price is moving sideways. So whenever price hits, it results in a quality reversal. And second, pair the band touch with a key level and candlestick price action. You first identified your key level because of this reversal point here to the left. When price comes back up to the key level, notice how it also lines up with where the upper Bollinger Band is, making it an area of confluence. You then wait for candlestick price action to occur, which you had through this long wick candle that formed right at the key level and the upper band, which shows a reaction to the level. As always, a reaction does not equal an automatic trade, so you need to look for a trend change confirmation to show that the uptrend is over and that the reversal has begun. Trend change price action comes in many forms, but in this case here, a simple way would be to wait and see if you get a momentum candle like this to form off of the level before looking for a trade entry short. Now in the opposite direction, this works the same. You had your key level here because of this reversal point. When price came back down, you had a long wick candle form at the key level and at the lower band, making this an area of confluence. Then once you had the momentum candle form off of the level, you would look for a long trade entry through the same time frame or through a lower intraday time frame. So moving on to the next strategy. This is directly from John Bollinger himself, who states that periods of low volatility are often followed by periods of high volatility. In simplified terms, when you notice a squeezing or narrowing of the bands, it represents low volatility, which then might lead to a breakout after with momentum and high volatility. So let's go through the variations of this strategy, starting with the first, which is applying it to trend trades. You have your moving uptrend. The bands squeeze together. Then once price breaks the band above, this signals a continuation of the larger uptrend, and you would look for long trade entries. Going in the opposite direction, you have your moving downtrend. The bands squeeze together. Then once price breaks the band below, this signals a continuation of the larger downtrend, and you would look for short trade entries. So this works for reversal trades as well. You have your moving uptrend. The bands squeeze together. Then once price breaks the band below, this signals a reversal of the trend, and you would look for short trade entries, going in the opposite direction. You have your moving downtrend. The bands squeeze together. Then once price breaks the band above, this signals a reversal of the trend, and you would look for long trade entries. So to increase the quality of this setup, you would use the following variations. A Bollinger Band squeeze that is also a pattern formation. You have your moving downtrend. Your band squeeze here also forms a channel pattern by connecting the swing highs and lows. Then once price breaks above the pattern, it also breaks outside of the bands. This is a higher quality reversal trade, and you would then look for long trades through the same time frame or through the lower intraday time frame. This also works the same for trend trades and in both directions. So next, a Bollinger Band squeeze that is also a trade setup. You have your moving downtrend, and your bands start squeezing together. This reversal point here gives you your support level. As price came back down, you had multiple candlestick patterns form right at the support level, giving you a long trade setup. Now, notice how this long trade setup is occurring inside of the Bollinger Band squeeze, which makes this a high quality reversal trade setup. Once price breaks the band above with momentum, this acts as a form of trend change confirmation and confirms the long trade reversal setup. This is then when you would look for a long trade entry point through the same time frame or through the lower intraday time frames. This again works the same for trend trades and in both directions. So let's take this up a notch and move into our preferred methods of using Bollinger Bands. So we have a question we need answered. What video topics do you want us to cover next? We always gauge the number of times the same topic is requested in order to decide on a video topic to cover. So leave your suggestions below right now. As always, to show your support, please hit the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. Last thing, make sure to go follow our Instagram account at WiseTrade to stay notified about a lot of big projects we have on the way. So the core of this strategy involves looking for a break outside of the bands like this and expecting price to reverse in the opposite direction. Now, there are two kinds of Bollinger Band breaks to look for. Type 1 is where you have a slight break and where the majority of the candle is still inside of the bands. This is a good quality break. Type 2 is where the candle breaks, but the majority of the candle body is outside of the band. The further outside of the band it is, the better. And evidently, if the body is completely outside and doesn't touch the band at all anymore, that is the best. Type 2 is a high quality Bollinger Band break, as it represents a very overbought or oversold region. Now, there are two variations of the Bollinger Band break strategy. Starting with the first, which is combining Bollinger Bands with a key level. You had your key level of support because of these two reversal points. As price reached the level, you had a Bollinger Band break right at the key level. Also, look at how far the candle body broke outside of the band. This is a very high quality band break. Then, once you had a trend change confirmation through the momentum candle, you would take a long entry through the same time frame or through the lower intraday time frames. One more example. You had your key level of support because of these two reversal points. When price came back here, price breaks outside of the band at the key level. And you also had multiple long wicks forming, which presented a great long trade opportunity. And again, when price came back here, it broke outside with a lot of the candle body outside, as well as multiple very long wick candles right at the key level. This is a very high quality long trade setup. Now, here's a trade setup that occurred on the Twitter stock. On the left is the weekly time frame. And as you should know by now, things you find on the weekly hold more weight. This reversal point here gives you your key weekly support level. And since this level is found on the weekly time frame, it is a very key level, which means there's a higher probability that price will react to it once it gets here. Now, you don't trade on the weekly time frame. We just use it when there is something available on it to use, such as key levels within range or price action formations. So on the right is the 4-hour time frame. The weekly key level here is this same level here on the 4-hour time frame. You then had a perfect Bollinger Band break right at the very key weekly level, which presented a long trade opportunity. Also, notice how far outside the bands the candles are. Then, once you had an intraday trend change confirmation, you would use our entry and exit strategy for a quick long trade. Now, going in the opposite direction, in an uptrend. You have your key level of resistance because of this reversal point here. As price came back up, you had a Bollinger Band break right at the key level. Then, once you had a trend change confirmation through the lower intraday timeframes, you would look for short trade entries. Now, this also works the same for trend trades. You had your clear moving uptrend. Key level here because of this reversal point. Then once price reached the level and created a Bollinger Band break, you look for an intraday trend change confirmation before looking for a long trade entry. So now, let's get into how to actually find an intraday trend change confirmation after the band break at a key level. On the left is the 1-hour time frame, and on the right is the 5-minute time frame of the same asset. These two reversal points give you your key level. As price came back down, you had your Bollinger Band break right at the key level, giving you a long trade opportunity. Now your trend change confirmation came through this momentum candle here, which means you wouldn't have been able to enter until the candle closed up here. So we want to use the lower time frame to look inside of this area here for price action that signals a trend change so that you can get into this trade at an earlier entry point. So your band break at the key level here on the 1-hour time frame is this same area here on the 5-minute time frame. You were using the 5-minute time frame to look for any form of price action that signals a trend change from a downtrend to an uptrend. In this case here, you had a perfect descending channel pattern form. And once price broke the channel above and making a higher high and breaking above the moving average, this confirms the trend change. You would then take a precision long trade using our entry and exit strategy and key tool. So if you only used one time frame, you wouldn't have been able to enter until after this momentum candle formed and closed up here, which is roughly here on the 5-minute time frame. But through using the lower time frame for your trend change confirmation, you got into this trade down here, which is roughly here on the higher time frame. An earlier entry means more profit and a tighter stop loss. So moving on to the next variation. Identifying a candlestick pattern at a key level and then looking inside on a lower time frame for a Bollinger Band break. So on the left is the Intel stock daily time frame, and on the right is the Intel stock 4-hour time frame. This reversal point here gives you your key level. As price came back down, you had a long wick candle form right at the key level, which presented a trade opportunity long. The trade setup here is this same area here on the 4-hour time frame. Notice how you had a Bollinger Band break occur inside of the higher time frame long trade setup. Having the Bollinger Band break occur inside of your higher time frame trade setup makes this a higher quality reversal trade setup because the Bollinger Band break represents an oversold region. You would then go to the even lower intraday timeframes to find a trend change confirmation before applying our entry and exit strategy. Now, to answer a question you probably have, why use Bollinger Bands? Why not just take a trade with price action on its own? Like we discussed in our Fibonacci video, if you haven't seen it, make sure you go check that out. You want to take trade setups that have a lot of high quality traits built into them or stacked together. So if you have a great trade setup that also has a Bollinger Band setup occurring, it makes it an even higher quality trade setup. A higher quality trade means there is a higher chance that price will move a greater distance. And obviously, the further that price moves away, the more money you will make from the trade. So let's move into our favorite method of using Bollinger Bands. This method is killer. So here are the 4 variations of the strategy, starting with the first, which is the core formula of this entire strategy. Step 1. You first look for a Bollinger Band break like this, followed by a pullback back inside. Then step 2. You wait and see if price makes a lower low like this, whereas the RSI makes a higher low. giving you an RSI divergence and signals a possible trend change. The combination of the Bollinger Band break and an RSI divergence makes this a higher quality reversal trade setup. Then, step 3. You always need to wait for a trend change confirmation on the same time frame or through a lower intraday time frame. Then step 4. After you had the trend change confirmation, you would look for reversal long trade entries through the same time frame or through a lower intraday time frame. Also, a quick note. This move here is what we call leg 1. The end of the leg 1 here, before price pulls back, is what we call the leg 1 head. This second movement here that forms the divergence is what we call leg 2. The end of the leg 2 here is what we call the leg 2 head. So in the opposite direction, this works the same. You have your moving uptrend, followed by a Bollinger Band break. Price pulls back and moves back inside before making a higher high, whereas the RSI makes a lower high, which creates a divergence. Once you had your trend change confirmation, you would look for short trade entries. So moving to the next variation. A higher quality variant of this setup is where both the heads of the divergence setup are also Bollinger Band breaks. So you have your moving downtrend, followed by a Bollinger Band break. Price moves back inside and pulls back before making a lower low. And RSI divergence. Now the key here is that the second head that formed the wide divergence also forms another Bollinger Band break. This divergence type, where both the heads break outside of the band, is an even higher quality reversal trade setup. So moving to the next variation. Combining the Bollinger Band break and divergence setup with a key level. You have your key level of support because of this reversal point here. As price came back down, you had your band break and divergence form right at the key level, which presented a very high quality long trade setup. You would then look for an intraday trend change before using our key entry and exit strategy. So this works the same in the opposite direction. You have your key level of resistance because of this reversal point here. As price came back up, you had your band break and divergence form right at the key level, which presented a very high quality short trade setup. You would then look for an intraday trend change before using our entry and exit strategy. Now the final variation. Identifying a candlestick pattern at a key level and then looking inside on a lower time frame for the Bollinger Band break and divergence setup. This is the Intel stock again. On the left is the daily time frame, and on the right is the 1 hour time frame. You had your key level here because of this reversal point. As price came back down, you had a long wick candle form right at the key level, which presented a trade opportunity long. The trade setup here is this same area here on the 1 hour time frame. Notice how you had a Bollinger Band break and divergence setup occur inside of the higher time frame long trade setup. You would then go to the even lower intraday timeframes to find a trend change confirmation before applying our entry and exit strategy. Now, there is an even more advanced scalping strategy using Bollinger Bands, one that is killer accurate. So here's the scalping formula. Step 1. You use the higher timeframes to find your dynamic directional bias. This is different from your traditional directional bias. Step 2. Once you have your dynamic directional bias confirmed, you would go to a very low time frame to take very quick scalping trade entries, only in the direction of your dynamic directional bias you confirmed from the higher timeframes, through finding Bollinger Band breaks. There is a very specific type of setup you have to look for that works in combination with the Bollinger Band break that makes this entry type killer accurate. These are very short-term, quick trades. If you want to learn more about these very low time frame, quick entries, head on over to our website at wisetrade.com, where we cover a lot of content that won't be available on YouTube. As always, make sure to go comment below right now with the video topics you want us to cover next, as we always read the comments to decide our next video topics. To show your support, please hit the like button, as it goes a long way in supporting our team. And also, go follow our Instagram account at wisetrade. So thanks for watching, and I'll see you in the next episode.